I'm joined by Alan Clarke, UK and Eurozone economist at Scotia Capital. Thanks very much for coming in and speaking to us. So I suppose what we're hearing is we're sensing a negative tone, if you like, from UK lawmakers on this policy of bond buying from the Bank of England.
We are. The economy is hardly growing, and these politicians are worrying they're not going to get voted back in again by their voters. And they're saying, why are you just buying gilts? Why don't you help small and medium-sized businesses? So there was some frustration expressed there, and fireworks early on.
And what more could the Bank of England be doing to help small and medium-sized businesses?
Well, I think the frustration from there and from businesses I speak to is that, well, inflation's incredibly high at the moment. That's killing the economy. It's really slowing growth. And they're pursuing a policy that could cause even more inflation. So why don't they think about other ways of sort of getting lending to small businesses, trying to narrow that gap between the average mortgage that people pay and bank rates? That's incredibly wide at the moment. So,
right. But I suppose they would argue that that's not their mandate to be implementing policies that directly go towards boosting small businesses, industry in the country, that is actually something the government should be thinking about.
That's exactly right. I think Mervyn King spent quite a while at the start of this briefing here talking about why they, as the bank, shouldn't be discriminating between sectors or particular companies. So they are in a bit of a bind in that regard.
And what about the risk of inflation? It came in at 5.2% for the month of September. I mean, the Bank of England was forecasting inflation of at least 5% in the UK this year. So what are the risks of this potentially becoming entrenched in the economy and actually not coming down next year?
Well, I think it's very likely to come down. It's just how far. I think we get down to about 2, but probably not below the 2% inflation target, which I think the Bank of England thinks it will undershoot that. But we've got a number of things coming in. Exactly a year from now, university tuition fees will go up by between 100 and 200%, adding anything up to 0.4 to inflation for 3 years. I suspect the Bank of England will look through that, but I don't think inflation will fall as much as they do.
Could we potentially see then another round of quantitative easing, probably, or potentially QE3, QE4 here in the UK if this round fails to boost consumer spending, boost demand and output?
I think it's very likely indeed. I think UK GDP will probably turn negative in Q4, probably not as soon as Q3. Now, that will come just before the February inflation report and Bank of England decision, and at that point I think they will inject probably at least another 50 billion more of QE, probably more at that stage.
And regardless of the internal policies, whether you're talking about the Bank of England or the government's policies right now, I suppose it cannot be divorced from what is happening elsewhere in Europe, from the troubles in the Eurozone, which seem to be escalating. So to what extent is that hampering the effectiveness of quantitative easing in this country?
It is to a large extent. I mean, the UK had its own homegrown problems. I mentioned inflation, but when equity markets fell off a cliff, the money markets and bond markets really froze, that's killing business confidence, and in turn that's going to feed into the GDP data in the not too distant future. So it's half the Eurozone but half homegrown problems that's really suffering now.
Thanks again for joining us this morning. Alan Clarke, UK and Eurozone economist at Scotia Capital.